Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of Paris rapeseed, Winnipeg canola, and Malaysian palm oil.
Paris rapeseed. The market's recent rise started in August from the support of the slowly rising long moving average, currently 482.25, and the 50% absolute Fibonacci line at 445.5. This move higher did not happen all at once, but during most of August and into the first half of September. In the process, prices formed a not very pretty looking reverse head and shoulders pattern for a fairly flat neckline, currently at 479.5. 14 weeks ago, prices broke higher over this neckline and the last of the moving averages, and reaching both the primary and secondary topside targets for the reverse head and shoulders top soon after. Reverse head and shoulders bottom soon after. In the process, the market created a mid-August based expanding wedge pattern that soon morphed into a bull channel and saw prices run up within this pattern until mid-November, where they peaked at the March 2023 high of 540.75. The turn lower was quite dramatic, with a gapping move down and a drop to finally be halted 4 weeks ago by the rising mauve medium moving average, currently at 493.75. The next move was a recovery higher up towards, for a short while, the congestion between 513.75 and 519.5 that originates from September 2012. Yeah, it's quite old actually, that one. Interestingly, as I said last week, this congestion seems in recent days to be better at slowing rising prices than slowing declines. Anyway, last week the market moved higher up over the July 23 high at 526.5, and importantly still hugging the dark blue middle time, currently at 535.25, from that prospective dark blue mid-September to late November bullish Andrews pitchfork I'd drawn 3 weeks ago. For the first part of November, this pitchfork worked fine, but as I said last week, and I quote, "It is acute and I would finesse it into a shallower bullish shift pitchfork, or even retire it completely if I thought it appropriate." End of quote. This week, so far, I don't need to do anything, but the pressure has been for lower prices, for a drop below the July 2023 high and the neckline of the June to October 2023 head and shoulders top, currently at 520.5, and a gapping move down below the congestion between 513.75 and 519.5, dating from September 2012, as well as the green short medium moving average, which is currently at 515 even. Prices have almost, though not quite, reached down to the dark blue lower time, currently at 504.25, which is seen to be the next support below, and a trigger to possibly morph this bullish Andrews pitchfork into the less acute and also, I suppose, less aggressive bullish shift pitchfork for the same move. All this action brings to the front my final comments from last week when I said, and I quote, "All this raises the question as to whether the action since mid-September, especially since mid-November, is a double top in formation or a bullish halfway hesitation." End of quote. Right now we are moving towards forming the double top idea this week, though we still have a way to go to really trigger the pattern. For that trigger, we'd need to see consecutive and consistent prices at least below the mauve middle time. Mauve medium moving average. Continue to watch this space. Winnipeg canola. Between late July to late October, the market created a reverse head and shoulders pattern. 6 weeks ago I said about this pattern, I quote, "It is waiting in the wings should the neckline be broken, properly broken, which time I will likely lay out fresh targets for this new, currently potential reverse head and shoulders pattern." End of quote. We tested the neckline, currently that's around about 673. Yeah, 676.10. My apologies, 676.10 since late October, all the way through to 5 weeks ago, when the patience with those who saw this pattern and were waiting for a break higher, including me, finally dried up and the market turned and broke down through the key long moving average, currently at 630.20, triggering a big move lower, all the way down to lows 3 weeks ago of February and August, between 571.90 to 575 even. The ultimate outcome of a monthly key reversal down for November. Thus, what earlier had looked like a Head and Shoulders bullish reversal pattern seemed to have become a Head and Shoulders continuation pattern. But that was only until 3 weeks ago, when prices halted just ahead of the congestion we saw in February, August and September, and back in November and December 2020 at 571.5 even and 571.80, and the December 2020 low at 567 even. We then formed a small base and prices headed higher, back up, but this time became stuck at the combination of the gold long moving average, currently 630.20, entwined with the 2021 low at 629.5, plus the green short medium moving average just below those, currently at 626.5, and the newly drawn bright red middle time, currently 631.80, with the bullish bullish shift pitchfork for the same move as the dark blue bullish Andrews pitchfork. This week, the overhead cap became too much for the market, and prices have tumbled lower. Through the medium moving average, currently at 614.60, and the May 2023 low at 611.10, and down through, if yesterday only for the first time, below the dark blue lower time, currently at 680, finally stopping just short of the neckline extension, currently at 590.10, of the old April to June 2023 reverse head and shoulders continuation pattern. Last week it looked like we had no follow-on lower to the monthly key reversal down seen in November here. This week it's looking like we will. What this market still leaves open is whether the action since mid-November today is either a bearish halfway hesitation or a double bottom. The answer to that question has not shown itself, not yet, but please keep an eye on the bright red lower time below, currently at 586.10. The action there, should we reach that far, the action there will, I suspect, decide which it will be. Bursa Malaysia crude palm oil. This is going to be a long commentary, sorry about that. I said many weeks ago, of all the oilseeds and vegetables, palm oil has been the toughest to decipher in recent days. There's been a lot of activity, and the changeover gaps, most notably in mid-September, have been a great hindrance. However, there have been 2, possibly 3 patterns here that have influenced the market and seem to have captured it somewhat, at least since April. Okay, so the first of these patterns was the broken upper time, currently at 36.59, of the old August to November 2022 bearish shift pitchfork. I know that this is way well down below the current market, but the upper time had acted in the past as a declining support. So I'd suggest keeping such a thing in the back of my mind just in case. The second pattern is the neckline, currently at 43.43, of the September to November 2023 reverse head and shoulders pattern. This is also another old pattern and one way down below the market. Not as far as the previous one, but it is important. Finally, I'd also possibly add the neckline, currently at 44.13, of the September 2015 to November 2017 head and shoulders top. I'm really not sure about this one. This was also an old one, a super old one, that had been way below the current market, but it is significant and is a lot closer to the market this week than it has been for some time, as are all these 3 of them. Anyway, in early October, the market broke up over the lower September to November 2023 reverse head and shoulders neckline, and became somewhat capped by that next neckline above, the one from the September 2015 to November 2017 head and shoulder top. This bracketing of the market between these 2 necklines happened throughout most of October. It eventually led to a mid-September to early November bullish halfway hesitation, which saw its topside targets reached 7 weeks ago. The market next started testing a pair of 50% Fibonacci lines overhead, one from July 2019 to March 22 move at 49.64, and one from the May 2020 to March 22 move at 49.92. And 7 weeks ago, indeed late 6 weeks ago, the market seemingly broke free on the top side from both of these, pushing them up over one of the June 2022 highs at 51.17. But failed to sustain the move, with the next resistance being a changeover gap between 53.20 to 54.18, also from June 2022, and then the big 50% Fibonacci line of the January 21 to March 22 move at 56.06, quite a way up. So prices pulled back down, back to that pair of 50% Fibonacci lines at 49.64 and 49.92 in late November, hesitating for a bit before dropping down and filling in the October to November changeover gap at 47.43 to 47.90. That was all the market managed to do on the downside, as prices then recovered higher, making a new high close 2 weeks ago, one not seen since June, and fondling that previously mentioned topside changeover gap on the continuation charts between 53.20 to 54.80. I should say it's June last year. Yet that changeover gap was too much for the market, and we've since dropped down below the June 22 congestion at 51.17, below the pair of 50% Fibonacci lines at 49.92 and 49.64, below the dark blue lower tie currently at 50.87 of the newly drawn 3 weeks ago, mid-October to mid-November bullish pitchfork, and most importantly of all, below the November low at 46.86. As I said 3 weeks ago, and I quote, "I'm not in love with this pitchfork and I would retire it completely if I thought it appropriate." End of quote. Well, after today it will be retired because another pattern has taken the ascendancy. I said last week, and I quote, "Just perhaps, the action since mid-October might just be either a possible double top in formation or a bullish halfway hesitation. The answer does not present itself on either just yet, but keep watching closely." End of quote. Your close attention would show to you that the mid-October today action is indeed a double top pattern. Plus, we are also on course to possibly have a monthly key reversal here for December. Thus, for the double top, we now have a primary target X in the 42.75 zone and a secondary, harder to reach target X1 down in the 40.45 zone. With regard to the monthly key reversal, if we close on New Year's Eve either over 51.25 or under 47.38, then we'll be on. Right now we are looking here for a monthly key reversal down in December. It is at this juncture that I would like to raise a big point, a point I've been stressing now for 42 weeks. I gave my thoughts back then on what was going on thus, and I quote, "So what now?" Well, for this I went to my standby on such occasions, the longer term monthly charts. And there was one clear standout level that needed to be watched, and that was the November 2022 high at 44.08. This is a key level on the top side, because if it is broken, properly broken, then there are significant potentials topside. Similarly, if it holds in that area, then there are significant potentials on the downside. So watch to see if prices reach up to the 44.08 area, and then what prices do at that level. End of quote. 6 weeks ago, I started analyzing the longer term patterns to ascertain what the opportunities might be. Here's what I said back then, and I quote, "Now, please note, we have only had a single month's close over 44.08, and that was for October this year. And what I'm talking about is a very long-term pattern. Ideally, I'd like another consecutive month, and it is a very hesitant but on my part, but I will try now to give a preliminary idea for what we may have as an initial opportunity topside, but only should we have confirmation of the move above 44.08. Okay, so what am I talking about? Would be in above the high of my daily chart, way up in the 5600 area. This would tie in with a really big and important 50% Fibonacci line of the January 21 to March 22 move up at 56.06. End of quote. Since then, we have seen a second consecutive monthly close in November, up over 44.08. But the threat of December being a monthly key reversal down places this whole idea under threat. You see, we are not too far away from 44.08, and we still have the better part of just over a week to go before we know. It's all very interesting and becoming also very, very crucial.
Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Service International Limited. And here comes the final important bit.